All right, good morning, everyone. It is 8:40 in the morning of February the 2nd, 2022, and this is my pre-market strategy session. So I'm starting off with the SPY here, and I've put a Fibonacci on the SPY from the top here at January 4th, 2022, to the bottom of the move that it made on the 24th of January, 2022. And actually, let's take a look here real quick. That was a negative 12% move. So, here in the pre-market this morning, it's if it opened up right now, it would open up just slightly below this 61.8 Fibonacci. And so right now, this is kind of just what I'm going with here. This is just sort of looking like, the right measurement for this dip right here. And it will be very telling if today, it's interesting that it'll gap up. I imagine that it'll probably come and backfill that gap and then make a move for 457.36 when it could gap up and not look back. It's certainly true. Really for today, what I'm looking for is I'm bearish, actually. So to change my mind on whether I'm bearish or bullish, if it breaks price here, that 61.8 fib, and then continues on, if it does that in one day today, I imagine it would probably take it more like 2 or 3 days to do that. We'll have one day where it closes above. Get if we get more like one day that closes above, and then another day that goes a little bit higher maybe, and then another day that kind of comes down and tests the Fibonacci there, and then another day that maybe it opens below, but then it pops back up above. So, we'll see what happens. We'll see how this plays out. It's hard to know. It's impossible to know really what's going to happen in the future. Sometimes the moves are quite obvious, but other times they're not. So this is kind of an important area. Hedgeye is really bearish right now. Bearish the S&P, bearish the NASDAQ, bearish the economy. There were some good numbers that just came out, for earnings. I think it was Tesla, Amazon reports soon. I think it was Apple. Yeah, it was Apple. Yeah, Apple just put up some really good numbers, incredible numbers. And then I think Microsoft did as well. I mean, yeah, good numbers. And, you got a company here, but doing estimated to do 50 billion. And this is just in one quarter. Good golly. And they did 51.72 billion. That is incredible. That is amazing. And it's really, really helped out the tech sector here. Let's take a look at the Qs. The Qs are making an incredible bounce off of its recent bottom here. Let's find it all the way from the top there to there. It looks to me like the Qs it has further to go to the upside to get to the 61.8 fib. And there's quite a bit of tech in the S&P. So, it might be time to be neutral rather than bearish. We'll see. I'll see what Hedgeye says today. There could be, there's a lot of work that needs to go in to both of these charts, the SPY and the Qs, to see it hit new all-time highs. They're not really that far off from all-time highs, though. Actually, let's take a look. Right now, as it stands, like at the open, or we'll take yesterday's close. As of yesterday's close, the market's only down 5.5%. That's not far off all-time highs. So Hedgeye, the guy that runs Hedgeye, Keith McCulloch, he's not perfect. He's really good, but nobody's perfect. So we might need to wait another quarter or so for the economic data to get really bad, like bad enough for people to want to sell it off. So okay, so today's watch list is pretty much, the same as usual. Really, there's a lot green on my scanner this morning. Incredible amounts of green on the scanner today. So I think it's just pretty much going to be a matter of finding a bullish setup for the SPY with respect to the VIX, and then just getting into a position for the day. You've got the VIX really coming down here. The bottom end of the risk range on the VIX is dropping lower and lower. So 20.21. There really could be a couple more months of rather bullish behavior on the markets until this quad 4 economic data really comes in and starts to affect things. So today I will be looking for bullish setups. It's definitely looking like a bull day. After a pullback though, the gap up this morning is a little bit spooky. This gigantic gap right here, let me get rid of the fib real quick. This gap, I don't like gaps very much. Let me actually let me say that correctly. I love gaps. I just don't like gaps underneath my, if I'm going to trade the SPY on the bullish side today, I'd really love, if the SPY comes down and touches, let's see, what's yesterday's close? Yesterday's close is right there at 452.97. If the SPY comes down and just tags that early in early trading, I'll be buying big time right there at that 452 level today. And so everything else is just pretty much standardized. Let's take a look at Bitcoin here real quick. Let's see what crypto's up to. Bitcoin is still looking really weak. And in fact, as long as Bitcoin is like weakening, it kind of is an indicator that the risk off is still in play. A really interesting day here on, what was that, the 24th of January right there. Bitcoin came right down to this level. It missed it by what looks like to be about, let's see, 32,950, and that's 32. Missed it by about 100 points, 200 points or so. But this support area really kicked in. It's interesting. So I don't see any reason to be, as of right now, I don't see any reason to be bullish or bearish. I'd be neutral right here. In fact, actually, the closer it gets to this 42,000 line right here, the more likely I would be to be bearish on it. It's neutral. It's neutral in this zone. It's bearish in this zone. And I'd say it's bullish in this zone up here. So it's still bearish. If it starts creeping back up to 42,000 right here, or even 40,000, I think it's going to get sold off again. The economic conditions are apparently, deepening into a quad 4 situation, which is deflationary for risk assets. So, and you can't get any further out in risk than Bitcoin. Where else does risk go if they want to go further out in risk than Bitcoin? So the markets and everything, they're not out of the woods yet. It's looking, there's a strong case to be made though for a next move to the next higher high on the Qs and on the SPY for the time being, until next quarter the slowdown is supposed to increase, or how should I say that? Things are supposed to slow down even more next quarter. So we'll see how that affects things. As of right now, though, it's looking like we're gonna have to wait until we get a real really big bearish move. McCulloch was, from Hedgeye was he was calling for a crash. He mentioned crash a couple of times. It might still happen. I don't see it as of right now. Some kind of numbers came out. Let's take a look real quick. Let's see. Yahoo Finance. Private payrolls fall for the first time since December. It was like negative 300,000. Yeah, there we go. Private payrolls fell by 300,000 in January. That news came out like a little bit after 8 o'clock this morning, and it really didn't even seem to make much of a difference. I don't know. Here's the 1 minute. I don't know if that had anything to do with it. Usually this happens at 8 o'clock often, like after I think there's certain brokerage restrictions and stuff for people who are allowed to trade at certain times of the day. I can trade basically from 4 a.m. on, but I don't know if the ADP number had anything to do with this or not. But the market, if it did, the market just blew it off anyway. I mean, just I don't know if it actually dipped on that news. It was bought up in the same minute anyway. So we'll see what happens. My guess is that bad news is good news. That means that the Fed isn't going to raise rates as much if the labor market starts hurting bad. Okay, everybody. That's going to be my pre-market strategy session for the day. Good luck out there. Keep your risk tight. Click like, share, subscribe. And I will see you at tomorrow's strategy session. I am out.